Welcome traders, I'm Adam Harris, Chief Market Analyst, and can you believe it? We're in September. So this is my markets week, my look at the markets ahead for the week ahead, for the month, and for the week, I guess, commencing Monday the 2nd of September. So we're heading into autumn in the Northern Hemisphere. In the Southern Hemisphere, it should start getting warmer for you guys. So let's have a look at the economic calendar. So first of all, really the early part of the week, we've got Labor Day. So I don't expect much volatility on the Monday and much movement in the markets, not really. But I expect it to pick up as it goes here from sort of, I should say, green going through to amber to red, but it's blue, yellow, and sort of amber, and then going through to red. We've really got the big kahuna on Friday, which is non-farm payrolls. We've got jobless claims and non-farm, ADP non-farm coming out on the Thursday. And of course, Wednesday, we've just got a lot, sort of Monday, Tuesday, Wednesday, we've got a lot of PMI data. So sort of the key things here would be UK manufacturing PMI, which is on that sort of 2nd of September, and really stable at 52.5. No significant market reaction expected unless there's a deviation in revisions. We've then got US ISM manufacturing. This is expected to be a slight improvement to 47.5. A weaker result could obviously weigh in on the US dollar and equities. Then we've got UK composites and services PMIs. Steady so far at 53.4 and 53.3, and really just unexpected drops could obviously impact the pound. We've got the US JOLTS job openings forecast to kind of drop to 8 million, and that's key for insights into labor market conditions. So we really want to see how that plays out. And then ADP non-farm employment, which kind of forecast to be at 136K, but it's kind of sets the tone for official non-farm payrolls and potential market volatility as the rest of the week kind of unfolds. We've then got the non-manufacturing PMI, slight growth expected at 50.9, below expectations, could indicate some economic slowdown. Major events, obviously, with a forecast of 164, this is non-farm payroll. Stronger numbers would obviously bolster the US dollar and impact bond yields. And then, of course, finishing off with the unemployment rate, and kind of expected to be at 4.2%. Any changes might significantly then impact the US dollar. So usually what happens is that you get a lot of volatility in the moment when the figures come out, especially around Friday's non-farm payroll. And then it tends to swish around for a bit in multiple directions before kind of potentially settling down into a move for the remainder of the session. So just be aware of that. It's incredibly volatile to trade, and is usually avoided by traders who are looking for kind of more stability and more consistent returns. Moving on to the charts and having a look here at the VIX volatility index, we can see that volatility tends to be returning back down sort of more to the lower levels, looking pretty calm. So we had that weird sort of spike, and right now it's looking relatively calm. So in other words, all is calm, market is happy. We have a look at the dollar index here. So you can see dollar index came down. The weekly charts is a very good way to look at it. It is range bound. We're now at the lower end of the range. I kind of be aware we had a failed breakout in 2023 in July. And, we could have a similar type of attempt. And of course, we're ultimately waiting for that dollar to break out of the range. And when it does, I have to prepare you, it is going to move, meaning that we could see a sustained move for quite a bit, quite a way. So we've had a bit of a bullish candle set up here. It's at the bottom of the range. The implication here is we break the high of this, we could see a continued dollar strengthening this week. If we move across and have a look at some of the other pairs, have a look at euro dollar, we can see euro dollar also having a very strong rejection. So traditionally, from a technical perspective, when you see one bullish candle followed by roughly an equally bearish candle, you could sort of consider that a U-turn, and therefore the momentum is much more to the downside here. So this week I'm looking to see if we break the lows of these candles. I'll be looking to see if price heads back down towards 1.09 for euro dollar. Cable on the other hand, so GBP is stronger. It is actually at a higher level of resistance. You can see it's been trending a lot higher. Again, looking at it on the weekly here, strong uptrend, very, very strong moves, actually technically quite overextended, but really quite strong, quite bullish against the US dollar compared to even the euro. So excuse me, do I expect a bit of a retracement here? Yes, I do. The thing is, I should highlight though, is that although we are overextended here, we've kind of reached into this, coming down towards 1.3 is a fair level for it to find support and potentially continue on. So if we just throw in a fib level to get a sense of where we are in relation to the previous low, We haven't really moved that far back. So I'd like to see a pullback at least into the previous highs 382, which puts it on the 20-period moving average as well as the 382 fib level on the previous highs. So all of that would identify this at least as a minimum decent requirement, considering how long this big move has been. Sustained move, usually it's exhausting. We'll see. The pound is very strong. We're not entitled to a stronger correction, but I'd expect one. So the minimum for me that would make sense is a 382, potentially a little bit further back down, even as far as the 618. We'll see. A lot of it has to do with how strong that dollar is going to step back into the game this week. Aussie dollar, you can see also at the top of its range here on the weekly, and a little bit of a rejection there. That monthly candle for August looking very strong and bullish. We could see a breakout to the upside there. So I'm curious to see this week how much of that dollar strength does return to the market. Is it quite a strong one? In others, do we see a complete follow through? Just to go back to that dollar index, do we see a continuation all the way up here to that 103 level, or does it actually fail? Are we ultimately seeing a move towards a break to the downside? So we do know that at some point there's going to be rate cuts, which can often obviously weaken the dollar. And so we could, it doesn't guarantee it. This is why the technicals don't always match up with the fundamentals. But the logic would be that if we get that weaker US dollar, we'd see a breakout to the downside, and the rate cuts would provide that. Let's have a look at Aussie dollar, US dollar. Also, as I said, back up near the highs there. Let's have a look at Kiwi dollar, US dollar. Again, also still approaching the highs there. Still looking very nice and bullish over here. So both Aussie and Kiwi dollars looking, Australian dollar, New Zealand dollar looking nice and bullish. Then we've got the dollar yen. So dollar yen has had this pullback into this area. The question now is it going to turn around? What I can say is that it is trying to turn around and head up. We look here, we formed a little bit of a base at this level. Price is trying to head back up towards these highs. So interesting to me whether we'll see that again. A stronger dollar is going to boost it. So dollar yen for now, even though obviously we know the Bank of Japan would prefer it to head lower, it looks as though technically it's going to try and head higher. Dollar Swissy also here with that stronger dollar coming in, showing some signs of potentially finding a bit of a base, and possibly we could see this heading higher. Dollar CAD, a little bit of a bullish candle there, not super bullish, a little bit overextended here. Shorter term, I'd expect dollar CAD to head back up into the moving averages. So day traders are probably going to be looking at some bullish moves to the upside on quite a few of those dollar pairs where they're expecting that dollar strength. And we'll see how that plays out. Now let's move on to gold. So gold bumping its head up against resistance there at that 2525 level. I'm just going to call it that. You can see the weekly candles struggling a little bit there. So we could see a bit of a correction to the downside if we break the low of last week's candle. It's a little bit overextended on the monthly. As I said last week, the weekly looks fine. The daily looks okay. It's the monthly that's a bit overextended. We've continued to push past these areas of exhaustion. At some point, I'd like to see a bit of a deeper correction and have price come back down, ideally back down towards 2200 or 2100 to test that for support. Silver here we can see producing a bearish engulfing candle. So usually if we break the low of that this coming week, I would expect silver to head a little bit lower. So really for me, it's going to be about breaking the high and breaking the low. Which one is it? Break the low, I'd expect it to head lower. Breaking the high of last week's candle, I'd expect it to head higher. Let's have a look at light crude. Okay, light crude, very bearish. You could just see the wicks on either side. So here we get a bearish move down, then we get a very strong, let me move this to full screen, very strong bullish candle, followed by exhaustion and wick on the following week, followed by a very bullish candle with a wick below that, followed by last week, very bearish close and a wick from above. So slightly heavier selling, but absolutely no doubt that there is a massive battle going on here between buyers and sellers. So interesting to see how that's going to play out. If we compare that to West Texas, you can see slightly different, but we've got wicks on either side. So there is a battle building up, even on a smaller scale here, even within the bigger picture, we've still got that battle playing out, okay? So just be conscious of that, that is the case. Just kind of going to adjust this up here. So we have a battle. So this week would be interesting to see if we get a breakout either way. That would be a shorter term breakout, not necessarily a medium term or longer term breakout, the implications of that. Next up, let's look at the Dow. So the Dow has recovered fully, very close to breaking these previous highs, looking very nice and bullish, looks really good on the daily. I'm quite happy with that. Just a breakthrough resistance now, managing to do that, and look at that monthly candle for August. So I've spoken a lot about September being bearish, and the only exception to that I can think of, because historically Septembers tend to be bearish, the only exception to that I can think of possibly is that it is an election year, and therefore that would potentially lead towards a deviation in the results of the market. Okay, but the markets are bullish, and they have been incredibly bullish for the last 4 years. In fact, they've done incredibly well. We had a little bit of a bear market, an overdue, very overdue bear market from January 22 to September. Interestingly, again, that it bottomed out around September, and since then it's been nice and bullish. And in fact, the prior ones from 2020 all the way through, and so basically we've had the most incredible bull market here since 2020. Okay, let's have a look at the Nasdaq. So it's looking nice and bullish. Just to go back here as well, I did highlight a couple of potential trade ideas last week, but this is also looking nice and bullish. So this one here being the possible sign of a pullback and a move up. So I'm expecting them to continue to push higher this week. And it's interesting because we go into September, and historically Septembers are really, by and large, the roughest months of the year. They often then are a prelude to the Santa Claus rally and this really nice bullish bull run we have until April. Occasionally we have bearish Januaries, but for the most part, the first quarter, the Q1, is always nice and bullish. And Septembers are really nice or very bearish, but see them as buying opportunities. We're not there yet. So all I can say is that technically the markets are looking very nice and bullish. And if we do manage to just burst our way through September, it's probably because it's an election year. But otherwise, I'm still gonna be cautious. It's just the nature of the beast. Okay, here we've got a nice little bullish inside candle. It's also the Russell 2000 looking good. It has succeeded in breaking outside of its range, and I'm very happy to see that happen. It's been there for a while. We can see we've had the FTSE 100 also nice and bullish, nice strong recovery, pushing on to new highs there. Pulled a beautiful retest into this area here, the previous highs, and then taking off from there. We've got the DAX. Let's adjust my screens a little bit here. Just feel like I give a lot of this. You can just see a very strong recovery for the DAX there. Very strong, big move. I spoke about this last week. I'm looking for a pullback. We haven't really had a decent retracement. We need to have that. This is insane to go for like 3 weeks straight up. When I say it's insane, it's very bullish. Here we had a minor pullback. This is on the ASX out of Australia. Also looking really good. So the markets, ladies and gentlemen, are just incredibly bullish. There was a tiny consolidation on the Nikkei before bursting higher. I've seen a few of the others, for example, like Alibaba's also, that has started to kind of creep a little bit higher. So let's move on to the individual equities here. You can see Anheuser-Busch, or BUD, is building up towards a little bit of a breakout here. So that looks like a very nice little breakout pattern. Let me just draw that in for you. So this is a nice little bullish breakout pattern on that, and that looks very much as though it's working up to that. It also has a bigger monthly breakout pattern. So we could see a shorter term breakout pattern to the upside and a longer term breakout pattern to the upside. Apple looking okay on the weekly here. Just continuing, I think, to tick up, not looking for anything too much. So this is something I just want to talk about quickly here because, of course, I've been talking about both September being potentially bearish and the markets looking really bullish. The markets do look really bullish. Could that change? Could we have a really bad week? I mean, we could. But my point here is to say that so far, technically, the markets are passing with flying colors in terms of a health check for the bulls. It looks fantastic. It looks as though the conditions are ripe for money-making opportunities and the bulls are very much in play. And that's when I see those types of conditions, 9 times out of 10, that's ultimately how the market plays out. I'm just saying at the same time, is it possible that we could concede that, things aren't guaranteed? Of course they aren't. But I have to tell you, technically, there are no signs of weakness in the markets right now. Okay, so sorry, I was looking at Amazon, just saying that looked really good. Look at that, very nice, little bit of a pullback here and a nice bullish candle. There's a very nice pullback. We've closed the gap here. This looks really good. Again, another possible buy opportunity. I really like the correction here is a lot better. Okay, so the correction on Amazon, I think, is a much better correction. So that could be a nice little move to the upside there. We've got AT&T that just continues to tick up. Look at that weekly one. This is a primo kind of quality trend. ARC is still stuck within its box for now. We'll see if that's the case. I predict that with ARC, the only way you're going to see it break out of the box is when a rising tide lifts all boats. In other words, it'll be thanks to the rest of the market lifting it that it's going to break out, and not at all because of its own capabilities. Right now, it is underperforming in the S&P 500, and you really have to be terrible to underperform when there's a massive, one of the most bullish markets in history, and everybody else is flying. You really have to be, there has to be something wrong. I'd be curious to know if there's any books being cooked, if there's any fraud going on. I'm not saying that there is. I don't think there is. I just think there's possibly bad management. I just can't really understand how they effectively are an ETF and how are they struggling this badly. But anyway, the whole point of an ETF in a way is it's meant to be similar to an index. You pick a constituent, you have a basket of constituents, and the idea is that they're meant to be kind of the best at their game. So when you pick a variety of constituents, and obviously there's might be a lack of diversity, that might be the problem, there might be a lack of diversity, it should still manage to kind of keep you afloat. That's kind of the goal. Anyhow, so moving on, ASML. So ASML having a little bit of a problem here, a bit of a correction. I mean, is it a bit more of a correction here, a bit of a bearish, sort of a red candle with a bit bullish finish so far. I'll keep an eye on this. My expectation is it should continue to climb. I read something during the week that had implications for ASML, and of course I've forgotten what it is because I'm just scanning too much stuff. But there was some concerns about competitiveness with regards to ASML and there being a possible implication for that. So I'll have a look and let's see how it plays out. So if it continues to get bearish, and in other words, if it fails to have a good week while everyone else does have a good week, then I'll have a further look into it, dig under the hood. Glencore sort of bottoming out here, still within its range, just staying in that area, so nothing really to comment on that. Tesco's had an incredible period, has burst its way through the kind of round number here of 350, so 360 would appear to be the next target. Let's just move this up to 360 and see what happens there. But it's looking good. American Express continues to climb, looks very nice over there, so that looks good. Okay, so here's a great example of this. So Berkshire's on fire, right? Berkshire's on fire, really nice bullish candle, very nice, but definitely overextended, absolutely overextended on the daily here. So as bullish as I am on it, I expect it at some point to have a bit of a correction down towards here, and then to continue up from there. So I'm looking for that. The good news with that kind of thing is that that then becomes a buying opportunity. And so you're looking for those corrections. When it gets like this, at some point now, getting in now is insane because now you're buying out of sync with the market. The market is in a heavy push phase and it's overextended, it's overpriced, it's overbought. So you're looking for a bit of a correction when that happens. So as an exercise, what we'll do is we'll mark this area here. I'll mark this area where price is now to see if we ultimately get a better price after the fact, if we get a correction, and then do we subsequently get a better price. Okay, Coca-Cola, same thing again, really nice boost. So you can see what has been boosting Berkshire Hathaway. Again, it's overextended. I need some pullbacks into the moving averages. It's overextended. BP still trying to turn around, so it's at the bottom of the range. We'll see what's going to happen with that. How's Exxon doing? Exxon was right at the top of the range here, so Exxon is doing something pretty good. They look like they're, going to break away from this box from that range soon. Estee Lauder continues to trickle down, so nothing there. General Motors looking good. Actually, I'm amazed. It's a very nice, almost bullish engulfing candle. Looks really good. Again, straight up move. We need corrections here, guys. There's no doubt that we're going to need some corrections from these guys. We need corrections from some of these markets that are overextended. JP Morgan Chase looks good. Again, overextended, looking really nice and bullish. Invesco, QQQ, looks okay. It's not terrible. I think it's potentially here I'm gonna mark this. I'm not as convinced. This could be a nice bullish move to the upside here. So generally speaking, when I mark these with a candle, I'm referring to a trade, not necessarily an investment, meaning I'm expecting a shorter term move. If I put it on the monthly, I'm expecting a big move there, so that becomes more of an investment trade, so to speak. But if it's one of these, it's just more of a shorter term trade, okay, for swing traders. Adidas also looking good. I spoke about how this is a megaphone pattern. It is working its way up to the other side. That looks okay. It'll probably break out to the upside at some point. Meta, I had a little bit of concern about that bearish divergence. It looks like it's starting to work its way through that. So I'm going to get rid of this now. I think what we really have to do is pay attention to this kind of area. That's really, let's call it the danger zone, and let's see if it can break its way up and through that one. Morgan Stanley, also breakouts and a retest. That looks good. I'm happy with that. NVIDIA is battling in this area. So it's battling in this area where it is. You can see the exhaustion kind of in here. It's a little bit of a triangle forming. So if you're not sure kind of how to see that, we've got a little bit of a triangle forming. But what I'm going to be looking for here is ultimately going to be a breakout. So I'm just going to mark it like this, just a nice little breakout. Looking for that to be the case. Okay, so we'll see if this week we get another move up. But it effectively looks as though it's trying to work its way to the upside. I'm happy with that. Netflix. Also looking somewhat bullish there. That looks really nice and stable. Not a problem there. PayPal. PayPal is starting to look good. So now PayPal is in an uptrend on the monthly. That is significant. Look at that MACD. Really nice and bullish. PayPal is starting to show signs of life, guys. It's broken outside of this range. And so PayPal now is not on the endangered list anymore. I say that. It's actually too soon to take it off that endangered list, but there is a significant change. Something has changed with regards to PayPal, and I have had a lot of emails in my inbox with regards to terms and conditions are changing, and we're changing this and that. So possibly they have been overhauling the system. Spotify continues to creep up. There's some resistance at this level here around about the 340 mark, but it looks good. We never had a correction down to that area. It's okay. Spider also continues to look nice and bullish. FedEx continues to push a little bit higher there, so they look all right. Let's have a look at Tesla. Tesla still within its range, so nothing ultimately has changed. And this week it had a little bit of a move down and then managed to close up a little bit higher. Not close higher than the open, but just managed to close higher than the lows. We'll see a little bit of a pushback off those. It's sitting above these moving averages. So right now there's a little bit more bullish momentum than bearish, but it's still stuck within the, let's call it the medium. You know what? I think it's fair to say within the longer term picture. The longer term picture for Tesla is uncertainty. Okay, if we use the monthly, which gives us a couple of years look ahead, it is uncertainty at this time. Vanguard looking really nice and bullish. Beautiful recovery, back over these previous highs. Technical traders are usually looking to see if you get a double top at these areas, but so far the markets look as though they're pushing through the double tops. Well, Disney, bottom of the range, pushing up a little bit. Nothing significant, no real significant change from last week. Then we have bonds consolidating here, just going sideways. I'm looking to see a real shift in the bonds. Eurobond as well, looking to see a shift to the upside there. So I'm monitoring these now because I'm looking for nice new trends to the upside, only because they've been trying to turn around for such a long time, but I want to see what happens here. So I'm now monitoring them more for buying opportunities. Let's have a look at cryptos. So cryptos, down week last week, so that's not great. That's looking at a sign of weakness, I would see. Still within this area, I would still say it can find support and turn around. Ethereum was looking about highlighting a nice strong big green candle. We didn't get that. We still don't have that. We're still in a bit of a sell-off phase, let's call it that. Binance also, so week down largely for cryptos. Interesting considering that tech stocks did relatively well. So last week I spoke about how rare it is for cryptos to break away or deviate from tech stocks, and this is what they've done this week. So I would pay attention to that. I think that that's significant. If they have, does that mean we're in for another big crypto crash? Not necessarily, but it does make me think that possibly big money is not as interested in crypto at this time as they have been in the past, and therefore we could see a bit of a turnaround from that. I'll leave you with that. So crypto's looking weak at the moment. I think we're due for some daily retracements on a lot of the equities. I think we could see a bit of dollar strength this week. The question is it short term? Is it going to be just a burst this week? Or are we actually seeing the return of a stronger dollar? Because we've had a weaker dollar for quite some time now. And so that is the only thing that I'm unfortunately will only know as time plays out week by week. But shorter term, expecting some dollar strength this week. And then let's see how we go into non-farm payroll. And if we finish with a really strong dollar post non-farm payroll next Friday, in other words, that would then lay the foundation for subsequent dollar gains. Thank you very much, and I will see you next week. Thank you very much.